Hi guys, this is Altamash Khan again, and I'm here to discuss the Indian financial market landscape. And like any market, we are a growing economy, and so the financial markets serve to facilitate wealth creation and foster economic growth in our country. And so it's very important to know the ins and outs of our financial market. So let's begin with the slides. I would like to first discuss some key components, including financial institutions, financial markets, and financial instruments. A lot of people don't know the difference between these. Financial institutions are banks, insurance companies, and mutual funds that serve as intermediaries that facilitate transaction and provide financial services. Now, financial markets, on the other, are platforms where buying and selling of financial instruments such as stocks, bonds, and derivatives take place. And what are these? What are these financial instruments that are being traded? They can be anything from stocks, bonds, or derivatives. So that's essential. The essential difference between what these three terms actually mean. Moving on, we'll dig deeper into what financial markets and what are the Indian scenario of financial markets in our economy. Um let's discuss Bombay Stock Exchange and National Stock Exchange. They're like the heart of the market. They're like two. We have two stock exchanges in India, and these are essentially bodies that kind of it facilitate the buying and selling of any kind of investment instruments. Including equities, derivatives, ETFs, everything. Bombay Stock Exchange being one of the most oldest one. I think it's the oldest in Asia. 1875, I believe, it was established, and it has a market share of like $5 trillion. It's one of the most a broad range of listed companies, and historical also has a historical significance, whereas National Stock Exchange is comparatively newer. It was established in, I believe, 1993, and very new. And But they were the first between the two of them to facilitate online transactions of investment instruments, which was groundbreaking at the time. It happened, I think, even after I was born. So 1 year after I was born in 1993, and the investment landscape has changed over time. Bombay Stock Exchange couldn't be left behind, and so they were next to follow and start online transaction in 1995. Um, so yeah, those are two exchange stock exchanges in India. Usually, every country has one or two stock exchanges. India has two. It provides better flexibility for people, more options for people to kind of trade in two exchanges. But usually, countries have one or two stock exchanges that are the most prominent ones. Let's go to the next slide and discuss SEBI. SEBI is a watchful guard. It is the regulatory body that ensures fair practices, investment protection, and marketing integrity within our markets, investment markets. And SEBI stands for Securities and Exchange Board of India. It sets all the rules, establishes guidelines for companies, brokers, and all the participants in the market. And also, the third function of SEBI is to kind of promote awareness and education to empower all the market participants. Moving on to some of the indices. Now, previously we discussed how National Stock Exchange and Bombay Stock Exchange are one of the most are the prominent stock exchanges in India, and so each of them have established like a list of most actively traded companies in their database, and club them together into investment instruments called as indices. And they are 30 of these on the list of uh, Bombay Stock Exchange, and they're called Sensex. And whereas Nifty 50 clubs together all of its 50 leading companies across various sectors and calls it Nifty 50. And people are allowed to kind of uh, invest in these as an index fund, and also some people, or I would say many people, invest on in derivative instruments that depend on Nifty 50 and Sensex. So it's kind of something to keep in mind. These are the top companies in their list, the best of the best companies in our economy. Nifty 50 is a list of 50 companies that have performed really well, whereas Sensex is um, list of 30 best companies that have performed really well over the years. And so that's what these two terms mean. Moving on to recent trends in Indian financial market, I would say it has been crazy. There has been technological advancements. Online trading has changed the landscape. Mobile applications, algo trading has been adopted, and so things have gotten really fast paced. Online adoption has made uh, more accessible to a common man, and there has been growing retail participation. Hence, individuals to enter the markets, anyone with a phone nowadays can install the application and start investing their money. And so it has led to a sense of financial inclusion amongst everyone, including banks and investment services, to kind of to expose these instruments to underserved population in small cities or villages. And more than that, it has also increased a global outreach for Indian markets. Indian markets are increasingly connected to global trends and events, and that might be both a good and a bad thing, because um, you see. Let me move on to the next slide, where I will show you all of these major events that had taken place in the global stock market. In 1929, there was a great crash, where a lot of these stock markets plummeted. Nixon stock. In 1971, there was a Nixon stock crash. In 1981, there was famously known as Black Monday. Dow Jones, which is an index fund, just like Nifty 50 or Sensex in US, it kind of plunged by 22%. And so also the 2008 global financial crisis, because of subprime mortgage crisis, and that's a whole another topic that has to be discussed in a separate lecture. But all of these crises, or all of these global phenomena that happened, affected Indian markets in certain ways, but not to the extent it affects now with but like with technological interconnectedness, and all of these global markets, individual sovereign markets connected in certain ways. So any effect now in a market somewhere is felt also in a different part of a market. And so in that way it has been a bad thing, but then in a good way, we are now following global trends, so we have to our companies have to match up to global expectations. Our markets have to match up to global expectations, and that's a good thing, because that fosters growth and improvement and innovation. um, so overall, I would say there's a huge opportunity. There's rapid economic growth. There's favorable demographics, regulatory reforms, all of these global connectivity, all of these good things happening, and it's a great opportunity for us to be part of this uh, part of this growth. Our markets are especially in India, are rapidly evolving, and there's huge growth opportunity for for anyone to create wealth and grow their money. So take this opportunity, but also remember that you have to seek guidance. You can't do uh, you can't randomly invest into things. There's a method to this chaos. And so remember to educate yourself, to seek guidance in areas where you're not that aware of. And so this is a good opportunity, and so you should take advantage of this. Thank you.